Welcome back here on Live Now from Fox. We're going to be talking about gas prices now. For the third straight week in a row, the national average is down 11.4 cents from a month ago, and the national price of diesel has fallen to 0.6 cents in the last week, the lowest level in 940 days. Gas Buddy says the lower costs are due to the summer travel demand fading away, as well as lower demand on other oil-consuming nations. But can we expect this trend to continue? And how is this impacting the oil and gas industry? To talk more about that, I want to bring in Jay Young. He's an oil and gas expert. Thank you so much for joining us here on Live Now from Fox.
Hey, thanks, Christy. Thanks for having me on.
Appreciate it. So we want to ask just why are we seeing these prices fall? I know I just listed two examples of maybe why, but can you expand for us?
Absolutely. Well, I mean, when you see geopolitical risks that are not there anymore, everything's around the globe that's pretty much taking care of itself, and oil prices go up and down because of the demand. I mean, supply and demand. Do we have more supply on the market than we have demand? Like you said, we're cooling off after the big summer push. So right now, we have the supply on the markets, but prices have come up the last couple of days. So I'd be aware here, going into September, October, of what prices are going to do, or what gas prices are going to do, and then obviously you have the election coming up too. So there's, you never know during an election year what's going to happen. You have a lot of geopolitical risk. You have elections. You have strategic reserves. There's just so many different factors going in. But right now, we do not have the oil necessary in the United States that we do need. We need more oil to be produced here in the good old USA. We don't have it, and our demand continues to go up and will continue to go up for the next few years. As I believe Goldman and the big boys are showing that oil demand is going to continue up for the next 3 to 5 years. So, we're still need oil in the United States, and this election, that's a whole episode by itself.
Yeah, let's talk about the election. I wanted to ask you a bit about that because Trump said if he wins, he wants to, quote, drill, baby, drill. That's what he and Vance have been saying on the campaign trail. Now, Harris, on the other hand, has historically been anti-fracking, although she's trying to backtrack that a bit now. Are you able to touch on this for us, these two very different policies and how they would affect gas?
Yeah. I mean, we saw $147 oil during Obama. And we saw, oil prices go up and with Biden. So, obviously during Trump, he was $30, $40 a barrel. So you do see oil prices go way down. So it's better for consumers, better for gasoline prices, when Trump was here. And right now, I mean, we're going to see prices continue to, stabilize until the election. After that, I don't think Trump's going to have the drill, baby, drill. He does want drill, baby, drill, but he's not going to have it like he had before. There's just not the capital necessary in the United States to continue on. And plus our refineries in the United States is a whole different story. Our refineries are up to capacity. We need more refineries. We need to increase the capacity per refinery. And we also need new refineries, which is hard since we haven't had a new one in over 20 years. We do need more refineries. But we are exporting oil right now because we can't simply refine the oil, and we need that heavier crude coming out of Canada and Mexico. So you do have that political risk, but also too, you're right, Christy. I mean, we're going to see prices continue to go up under Harris and their administration. They do not like fracking. They do not like. I mean, I know she's backtracking, but she gets in office, she'll do just like Biden, and continue to hurt the oil and gas industry from doing what it loves to do, which is just like us at King Operating, we love to drill, baby, drill.
And we're talking about these prices being the lowest they've been, right? But why don't people feel that? Why don't people feel like this is the lowest that they've been?
Yeah, well, we're at 75 today. It was down 71. Now it's up to 74, 75 today. And, gasoline prices will come down or have come down the last few weeks. But we are going to see prices. You'll see gasoline prices nudge back up pretty soon because we do have higher oil prices. And two, like I said, geopolitical risk, anything that happens anywhere, you're going to see prices, start to go up again. So that's one aspect. Second is, supply and demand. We don't have the supply necessary, as I've always mentioned. And we will not have that because of the Biden administration. Trump, in the other way, says, "Hey, let's go, let's drill, baby, drill." And I do believe that to some extent, but he only has so much capital to to get the prices a lot lower. That would be very hard to do. I mean, the private institutions, the teacher certificates, people that of that caliber, they're not going to be drilling. They don't want to put the capital to work in the oil and gas industry. Trump made them do it. He was very pro drilling and drill, baby, drill, and he had all these different institutions put all this money into oil and gas, and then COVID hit, and it really killed a lot of that capital. So they lost a lot of money, and I don't believe financial institutions will come back in the Trump administration and want to just jump back in the oil industry.
In recent years, the oil industry has become more efficient. In other words, it doesn't necessarily take as many rigs to produce the same amount of oil. So how low can prices go for it still be attractive to drill?
That's a good question, because when prices do go down, you do see drilling costs go down. It may cost you $12–15 million to drill a 2.5–3 mile long lateral in today's world. But if prices do come down, not as many people drill, so the drilling prices will come down too. So that's one answer to your question, but also too, it could still be at $50 to $60 a barrel, and it still be very, very profitable for oil and gas companies. 30, 40 in these shale, because it costs so much more to drill wells in the shale, S-H-A-L-E, in the shale with the fracking, that those prices would need to come down considerably. And they just don't do it. It's just so hard and so expensive to produce that much oil that's the biggest problem. A lot of oil projects that you see around the country are not necessarily that expensive to drill, which is like what we do. But then you see it, so you see these prices that may cost you $3 million or $3.5 million to drill a normal well, where right next door, if it's a shale well, it may cost you $7 or $8 million because of the size of the frac and the cost. So that, which is taking over the industry in the past, the last 10 years, we've seen, crude production in Midland by itself go from 1 million to 6 million barrels of oil in the Permian Basin, only because of shale fracking. And if prices do come down, you'll see a lot of companies retreat. With a lot of the big acquisitions that you've seen with Exxon and Pioneer and Endeavor, you've seen a lot of those consolidations, and if prices do start to come down, then you will see a lot of people that will not be drilling as many wells.
One other thing we wanted to ask you here is we just did have this breaking news before you came on. The Federal Reserve Chair Jerome Powell saying that they are prepared to start cutting interest rates. In terms of inflation, in terms of a broader picture here, how could this potentially impact gas?
Yeah, a good question, because when interest rates do come down, it's cheaper to borrow money, and if it's cheaper to borrow money, people will put that money to risk as long as oil prices stay up. So you could see a little bit more. Now, with the big problems that I see in regards to production and the supply side of economic supply and demand is a lot of these consolidations in these companies, and you're seeing Exxon, who there's a lot of people on their board that do not like oil and gas drilling. It's kind of weird. You see Exxon and people on their board do not like oil and gas drilling. Well, why are you on that board? But anyway, different question. But with a lot of different consolidations, you're not seeing as many rigs go on the market, and you're not seeing that. But if they do have the money, and if oil prices do stay up with interest rates cutting, then we'll borrow a lot more money and we'll do a lot more drilling. So yeah, you're seeing a chance or a hope that with interest rates going down, that you will see a lot more companies coming into the market.
Jay Young, appreciate your insight on all of this. As I do know you are 4 decades, your family is in this industry. So is there anything else that you'd like to add, any insight you may have into this conversation?
Well, I mean, Christy, we talk about politics, we talk about what's going to happen with oil and gas prices, and it's a good guess from anybody, really. I mean, because there's so many different factors that can happen. And the best thing to do is just, hey, put some of your portfolio into oil and gas, because I do feel like it's going to be it's a good sector, it's a good investment, it's going to be something that we'll see for a long time, and we're not going away anytime soon. And yeah, you're right, 4 generations. My great-grandfather had 12 kids, and out of 12 kids, everybody was in the oil business. So it's a great business, and it's you know, family reunions were real fun back then. It's kind of weird that, you know, I know people have family reunions and they're talking about a lot of different things, but hey, we talked about the oil business, which was a lot of fun, great industry. And Christy, you need to come down to Texas. I'll take you on a rig and we'll see how to frack a well or drill a well, and we'll go through the whole area. It's a fascinating business, something that we really do need in the United States. It's not going away anytime soon, you know, and that's what people are. Some people, the people that are I'm trying to be nice, green tree huggers, people that do not want the oil and gas industry. Hey, I'm sorry, the demand is there, and the demand is going to stay there for a long time. So we can't do anything about that. So, hey, let's stay in this industry. Let's be careful with the industry and what we're doing, but it's going to be here for a long time.
Appreciate you joining us here, Jay, on Live Now from Fox, and it will be interesting to see how these prices continue to change. As you mentioned, we do have an election coming up. Thanks for being here with us.
Absolutely. Thank you. Have a great weekend.
You too.